Mayuresh Joshi also joins us, fund manager with Angel Stockbroking. And Mayuresh, DLF. What has changed for DLF? What explains a 17% solid move? The fundamentals are still the same. Concerns have not got over operationally. Okay, quarter, but 17% is, oh my God.
Afternoon, Nikunj. I think the move itself is very intriguing. So clearly, I think we still maintain our stance that the oversupply conditions, specifically in the Noida and Gurgaon region, still remain very, very high. The inventory levels are very high. The realizations probably have not inched up and are not expected to inch up. So in terms of free cash flows, it is still expected to be extremely muted for a lot of these players operating out of the region, DLF, Unitech. And clearly, I think if you look at launches, I think even the new launches are expected to see a very muted kind of response because of the situation that we've got there. So clearly I think the move is intriguing, but clearly I think at this point of time we'll stay away from the stock even if it's moved 17%.
But you know, while we're talking about DLF, you're seeing all of the real estate names get active in the session today, Mayuresh. Do you see this to be part of a broad rate sensitive rally that the market is perhaps enjoying or focusing on in lieu of course all those murmurs about a possible off-meeting rate cut?
Afternoon, Tanvir. It is a possibility, but clearly I think the dynamics for the industry have not changed a great deal. So as I said, the oversupply situation stays more or less in an overextended zone for most real estate players across the country. The south-based players are a little bit better off, but again, I think the kind of launches that we are seeing and the kind of demand that we are witnessing, it's not a great scenario. So I think the general theme would remain the same. I think the cash flows will take substantial time for a lot of these guys to improve, and even the guys that operate out of the Bombay region, I think they'll take time because I think there is too much inventory with the kind of registration numbers that we've been observing over the past few months. I think it's not seen a sudden spike or a sudden improvement as well. So I think we'll remain cautious on this space, but a few names on declines is definitely what I'll watch out for. So something like a Prestige Estates is something that I'll watch out for, and if it declines, we might have a look at that, or even something like an Oberoi or Godrej Property on declines.
How real is today's rally in PSU banks? Even if there is a rate cut, even if there is out of turn rate cut, that will change honestly nothing for these PSU banks, because for PSU banks it's not demand, it is the existing book which is a problem.
So clearly, Nikunj, I think we are working with the same thesis. I think the internals of a lot of these PSU banks are still weak. You've consciously seen a lot of these banks go slow on their credit growth, and that was obviously seen in how the advances have petered out. Clearly, I think the concentration was to stabilize their asset quality, which they were successful in doing. But again, I think our take is that the internals remain extremely weak, and though the recapitalization news vitalized a lot of these banks and the run-up was quite steep over the past few days, our take is the internals will take time, because if the credit cycle takes time to recover, the stressed out sectors within infrastructure, steel, which is again going to face huge issues with the Chinese yuan devaluation, I think those are going to cause problems in terms of a lot of exposure that they have towards working capital. So I think the working capital constraints are not going to go away in a hurry. So I think we'll remain extremely cautious on the PSU space, but I think extremely selective at the same time as well. So State Bank of India is something that we'll continue to prefer. The net slippages were a little bit of a worrying part for State Bank, but apart from that, I think most of the other numbers were more or less in line with what we were expecting. And again, I think out of the entire PSU lot, advocacy remains extremely strong. Their CASA ratios remain strong, and again, I think asset quality is more or less stable for the bank. So clearly, at 1.1 times, 1.2 times price to adjusted book, even at the current juncture, State Bank is probably our preferred pick in PSU universe.
But if you're talking about, if you're betting on the credit cycle recovery, Mayuresh, the problem really remains on, offtake there, because you're not really seeing utilization levels go up. I mean, if you look at the WPI number, month on month, we've been getting a negative number. Manufacturing product prices have only been declining. The IIP number suggests that there is growth happening on the ground, but the investment cycle is really still not picking up, and there are no clear signs of that happening. So, how do you match this dichotomy and then place your bets on when the infrastructure stroke, cap goods, engineering companies, when their demand environment changes and thereby, improves their credit profile to be able to repay their loans or even demand additional loans?
So clearly, I think the stress will continue for some length of time, and it's more hope at this point of time rather than anything happening on the ground. So I think you've rightfully put it through. I think there are a lot of concerns when it comes to the working capital requirements. And if you look at the bank balance sheets, I think a lot of extension probably on the infra side has happened towards working capital. Having said that, I think if you look at the number of completed projects as a percentage of the total projects that were ongoing, it is still a very minuscule component. So I think the theory that goes that the capex cycle is not picking up is actually justified both by data and in terms of the projects that are actually coming on stream. So clearly I think it's more hope at this point of time, and again our take is that if government spending picks up, you will see some implied effect with a lag, say a couple of quarters. But clearly I think that has to start getting reflective in numbers. I think we've not seen that happen for most players within the cap goods stroke engineering stroke infrastructure space. And within the space itself, I think something like an L&T still stands out more or less to do because I think its execution was a little bit better than what the others did. And again, I think the hydrocarbons division posted much better numbers than what Street was expecting. So I think the divestment procedures that one is really expecting with L&T Infotech and the others, I think would have a telling effect. But apart from that, I think it's still been very muted on the ground. And I think unless it shows signs of recovery, I think it's very, very difficult to have a say on which companies will do well. So again, I think we are remaining extremely stock selective when it comes to cap goods stroke industrial stroke infrastructure.
The broader question, I guess, Ashwini, is that today DLF has moved. Going forward, will other real estate stocks also jump on the bandwagon?
Even today, things like Colte Patil, HDIL have moved up, and possibly, the rate cut issue has something to do with it. So, a 25% rally on, real estate stocks without much changing is easily possible. So, they could all go back from where they've fallen. So that sort of trading rally is possible. I don't think DLF is going to make new highs. So let's keep it at 20-25%, but definitely something has started today on real estate, and index is up 8%. So, you can't ignore that.
Let's look at IT. And the reason why I'm looking at IT on a day when real estate stocks are moving up is because IT in this month has appreciated, or the IT index in this month has appreciated by about 5%. Now, there you go. TCS, the big one. Now, TCS is a gorilla. It's got a market capitalization of $80 billion. When a company which has a market capitalization of $80 billion, when that one moves up, that just tells you the kind of action which is there in some of the large cap IT stocks. Infosys is taking it easy, but I think the central stock in the IT space is TCS. And Mayuresh, TCS is expensive. TCS numbers for 2 or 3 quarters have not been great. The volume growth is strong, but realizations are not there. Yet markets are rewarding it for what?
So clearly, Nikunj, I think if you take a few quarters out of the book that TCS has delivered over the past few quarters and look at the past performance, I think it has been a consistent performer, and that's the reason why the valuations were always trading at a premium when you do a simple comparative check with their peer like an Infosys. But going forward, I think with the kind of investments that TCS is making in digital technologies and the likes, I think BFSI, manufacturing, retail, still holding extremely strong for TCS. Client mining has been extremely strong, and again the management commentary is extremely robust. So our take is that generally for the top tier IT names, I think the consumer discretionary spending that we are witnessing from the US markets would continue. European markets are more or less stabilizing, and I think the kind of product mix that these guys have got and the kind of client mining that they are doing, that will ensure that their cross currency growth both in volume and dollar terms would remain extremely strong over the next couple of years. So I think the valuation premium that it still derives would continue, and think we are generally bullish on a lot of the top tier IT names, Infosys, TCS, HCL Tech, all included in that.
Mayuresh, stay on with us. Let's get an idea at 255 and come to you first. Ashwini, what is it that you'd recommend?
I think Z has made a new high or almost close to that. It's made a massive bar. That's a buy with a stop of 400, look for targets of 450.
Mitesh, what about you?
Bharat Forge, I think, bouncing back very nicely from its short-term averages. So that's a BTST with a stop at 1208, targets of 1245 for Monday.
Okay, gentlemen, stay on with us. Lots more to talk about, lots of stocks to focus on. We'll do that when we come back. Last half an hour of trade left. Don't miss that.
Well, if you thought that real estate and PSU banks are the only two groups which are sensitive to any kind of an rate cut action, think again. Two-wheelers, I guess, are the most sensitive. Is the most sensitive group when it comes to a rate cut action, because 0.5% on a two-wheeler loan, 0.25% on a two-wheeler loan translates immediately, translates automatically, and that historically has changed the trends. And the reason why I'm talking extensively about two-wheelers is because two-wheeler stocks today are looking very strong. And it's a double bonanza for Bajaj Auto, which is that they derive about 1/3 of the revenue, nearly 40% of the revenue from exports now. And given where rupee has moved, it's really going to augur well for a franchise like Bajaj Auto. Mayuresh, do you agree with my assessment?
To a certain extent, yes, Nikunj. But again, I think if you look at the kind of volume growth that has been happening domestically for a lot of these majors, including Bajaj and Hero MotoCorp, you have seen a drop, at least in the month of July. So I think if the monsoons do not pan out the way they are, and it's looking rather bleak at this point of time, even if a rate cut comes over the next 2 months, I think it would not necessarily mean that volume growth should start spiking up in a big way. MSPs have not got increased in a substantial manner. So I think the rural spending power is still on the lower and the softer side. Having said that, I think the run-up on these stocks have been quite humongous over the last few months. And clearly, I think we are very, very close to our fair value. So I'm not ruling out a 10% more spike up in these stocks. But then again, the risk reward from the current levels look restricted to those levels.
Fair enough, Mayuresh. The other point I wanted to bring up is also, the consumer story, because that's always been a talking point, especially after earnings, because that's the pocket where there is some visibility and certainty on bottom line and top line growth. Demand is weakening. That was pretty evident with the way the top line performed for a lot of consumer companies, and volume growth also kind of stepped back a bit. But all in all, do you think that in this earnings season, the defensive nature of that pack pretty much held out still? I mean, look at Jubilant FoodWorks. Yesterday, the stock was down 3%. Numbers looked okay, but the same store sales were not something that matched market expectations. But from the day's lows, the stock has recovered some $200, if I'm correct out there, 1,700, okay, about $140, and up 3.5%.
So clearly, Tanveer, I think within this consumer discretionary space per se, I think we need to really distinguish between the urban side of the story and the rural side of the story. So on the rural side, I think all these parameters will still play truant in terms of how monsoons pan out, the MSP price hikes, which have been marginal that we've spoken about. And that has been very, very evident from the volume growth that you're seeing generally for FMCG companies. What has probably helped them is with the kind of benign input costs, the gross margin expansions have been quite expansive for a lot of these companies, and that has probably trickled down even on the bottom line. But clearly how the trend would sustain depends on a lot of parameters. So clearly I think even on the urban side of the story, stocks like Britannia have held up exceedingly well, and though the valuations are against them, I think the premium still justifies because of the cost optimization measures that the management is probably talking about. So at this point of time, within the space itself, I think valuations are appearing to be headwind for a lot of companies. So I think it's a whole strategy, specifically in cases like a Britannia, where we have been very, very aggressive at lower levels. But again, I think valuations too demanding at this point of time.
Okay, we've discussed Jubilant FoodWorks with Mayuresh, but Ashwini, you want to come in on Jubilant FoodWorks? It's a smart recovery. It's an impressive recovery.
Well, the low of today is about 1689, and right now it's 1826. Very interesting action on stocks which have come out with bad results. There's been huge buying. Look at Voltas. look at Jubilant Food. With this kind of a bar, you can be sure that the bottom has been made on Jubilant Food, and maybe next quarter you'll have good results, etc. If nothing else is working, people will have probably pizza, and we should cross 2000 fairly soon. So this is the kind of bar that should attract people to buy, like we saw with DLF. All of these bars are created by big buyers who come into stocks on bad news. So definite buy on Jubilant Food right now.
Oh, yes, indeed. And Voltas also, smart recovery there. Mayuresh, since we were talking about the consumer story, I also wanted your view on Nestle. Now that the decision has given them some relief, and the stock has, perhaps part recovered its losses. I mean, it cracked from 7,000 odd levels, went all the way down to 5,500, and now has come somewhere in the middle at 6,300, 6,400 odd. Do you think it bides its time here? Because, there is still a lot that needs to be sorted on a key brand that contributes majorly to their earnings.
Oh, absolutely, and I think the judgment would be key in determining how the stock shapes up in terms of price. But clearly, I think when you're talking about valuations, I think valuations a little bit on the steeper side. It's always traded at premium valuations. It's always been a qualitative portfolio pick for a lot of investors. So the take clearly is that yes, I think the impact would be very, very evident in terms of numbers, at least for the quarter to come. But I think if there is any favorable judgment onto the stock, I think clearly the stock will react very, very positively. But again, I think it's run up too much, and the valuations again a little bit on the higher side.
Okay, stay on with us, Mayuresh. Let's just go across and get a quick analysis on the key stock stories of the session. Darshan joins us with a quick preview at Cipla. We have Mubina talking about Hindalco's earnings. Yatin will also take us through some important cues, especially what's happening with the real estate basket today. And BPCL, Ajay will focus on that. But I'll start off with you, Darshan, first on Cipla.
See, it's going to be a strong quarter for Cipla this time around because the big contribution from Nexium into their margins and bottom line will come in this quarter. Remember, in the fourth quarter last year, they booked the top line, but margins and profit numbers always come in with a lag of almost a quarter. So this time around, they will be there. Mainly, as far as the profit is concerned, we are seeing a 60% growth, and EBITDA, we are seeing a 50% growth. So margins will come in very close to the 24% mark. Growth will be led by the export market. We are seeing more than a 50% growth coming from the export market, mainly on three reasons. First of all is the Nexium contribution that will come in from Teva. We anticipate that the EBITDA contribution will be anywhere between $35 to $40 million for the drug on here. Secondly is the rising tender sales, and the South African business is also doing well. So these three factors will contribute to the export growth. Domestic market, we are seeing a stable growth of 15 to 20% that should come in. And mainly, if you're looking at it, most of the analysts do believe that post a strong number in the first quarter, the management in most cases will raise the guidance for the full year as far as the top line is concerned.
Thanks, Darshan, for that. Mubina, Hindalco's earnings, and what did you take away from them?
Well, mixed bag really, but what you see the stock is reacting to is primarily the margins, because sales and PAT have come in below estimates, but margin has exceeded estimates. Let me start off with sales. That has come in at 8,517 crores, up 7.4% when compared to the corresponding quarter. Margins, like I said, has come in at 10.3% versus 9.44%, again exceeding estimates. And profit after tax has come in at 107.2 crores versus 327.5 crores. That's down 67%. Let me come to sales first. Now that has, not been able to do that well, but that's because of the only reason being that the aluminium prices have not performed well, and that's come down. So despite strong volumes, we have seen lower realizations, lower selling prices, and that's why sales figure has come down. But margins, that's the star performer for this particular stock, and we spoke to a few analysts, and they said that's primarily because of the possible improvement in the TCRC margins, which is kind of doing well for the whole the EBITDA of the whole company. Lastly, coming to profit after tax, now that's not really done well, and that's primarily on two reasons, and that's depreciation and interest costs. Well, these two have increased, of course, because of the ramp up that we've seen in the Aditya and Mahan smelter. So there's a lot of capitalization there, which has weighed heavily on the profits.
Thanks, Mubina, for that. Ajay, BPCL, and every time I have this discussion with you, it's really about a margin play this quarter for all the OMCs.
That's correct, Tanveer. In fact, BPCL was also not far behind in posting very strong set of margins. In fact, the gross refining margins grew at almost $9 compared to $3 last time round. And despite of that, in a very strong market, the stock of BPCL is trading lower by 1.25%. This is exactly because most on the street had already factored in that the GRM performance would be good, the throughput would be good, and the net profit would be higher. And in fact, in BPCL's case, compared to IOC or HPCL, the inventory gains is also not very high. But whatever good positive about a good GRM was already built in, and the moment results were released, there was a profit-taking bout which took the stock lower. So healthy performance, but because everything was built in, stocks are trading lower. In fact, the management also has told a lot of analyst community after the numbers that outlook for the subsequent quarter on GRM is not as good as how the first quarter has been. So people will have to tone down their GRM expectations as well.
Okay, thanks for that, Ajay. And Yatin, come to you. Last but definitely not the least, the buzzes of the session today. And we've had an in-depth discussion about the triggers there. But institutional interest coming back in real estate stocks?
Clearly, and after the inflation numbers came in, and the chances of a rate cut coming in, we have seen a strong rally in banks and real estate stocks. I don't know when did I see the BSE Realty Index up 7% in a day. And clearly, it has been led by stars like DLF, and post the strong operational results, DLF has seen some buying. In fact, if you look at the brokerage view also on DLF, it has been quite strong. UBS coming with a buyer target of 190 rupees. And that 190 rupees is at a 40% discount to the NAV of 320 rupees. So clearly on the valuation front, some value investors are buying in from the open market coupled with short covering. And, most of the brokerages believe that once there is a regulatory clarity, there are some non-core assets on the book, they get disposed. So, in the next 2-3 quarters, there will be some earnings momentum. As far as Godrej Properties is concerned, recently they sold one of their, BKC project partly to a pharma giant for a consideration of 900 crores. That stock is quite active. HDL is witnessing some, short covering in the future and option segment. That stock is gaining in double digits. And if you look at other stocks in the BSE Realty Index, India Bull Real Estate, Oberoi, Unitech, all of these gaining over 5%. In fact, all the stocks in the BSE Realty Index are trading with gains.
Well, what a day of trade it's been for the entire real estate space. And one big move in DLF has really changed or transformed the way how the short-term setup has changed. DLF is still holding on. And the interesting bit here is that even though it's a mighty rally, it's a monster rally, it's a jump of 17% for India's biggest real estate company, there is just no temptation whatsoever to book any kind of profits. And volumes, 20 million shares only on National Stock Exchange, that's huge, that's big, that's massive, that's colossal by any yardstick. DLF is having impact on HDIL, but trust me, there is no connection whatsoever. Every Indian real estate company has different dynamic and has a different business model. Mayuresh, Tata Motors, the good old Tata Motors, value investors love to talk about that stock, but somehow nobody's taking notice of it.
So clearly, Nikunj, I think the kind of price fall you've seen, a lot get gestated in terms of how China is panning out in terms of JLR numbers. The volumes are already down around 20% of the overall volumes. But clearly, I think the 2-3 pronged strategy that Tata Motors is adopting will clearly have benefits FY17 onwards. For a greater part of FY16, I think you're going to see EBITDA compression happening generally because of the Chinese slowdown. Having said that, the modular strategy platform that Tata Motors is building, the captive engine facility in China, I think that's all going to add to numbers in terms of how EBITDA expansion will happen from FY17. And even on the domestic side, I think MHCV segments have started showing traction. So the new launches that one really expects from Tata Motors, the Jaguar XE and the other couple of is expected to come through, I think that will have a huge amount of implied effect when it comes to how volume will shape up. It will take time, but clearly I think if one really has a long-term view, A, valuations looking extremely attractive, B, I think the kind of volume degrowth that one expects from JLR and the domestic business itself is largely getting factored into the price, and our take is that the earnings should improve significantly FY17 onwards. So yes, I think we are very, very positive onto the stock. I think the stock at the current juncture gives a brilliant opportunity for long-term investors to accumulate.
Right. Are you also suggesting to book profits in oil marketing companies, given that the story and the new reality on crude is pretty much played out with the stock prices? BPCL, HPCL, IOC, from a year-to-date perspective, have been key performers. And my part two to that question, Mayuresh, is that do you still see that reality setting in to the prices of airline companies, Jet Airways, SpiceJet? They've started moving, but do you think that for that reality to seep into the business will take some more time? So hence more headroom for these stocks. So book profits in oil marketing companies and perhaps buy the airliners.
So clearly, Tanveer, I think the oil marketing companies were more or less moving in sync with what the market was expecting. With under recoveries going down, the debt and interest burden has come down drastically for these companies. Clearly, I think the GRMs, in my opinion, will not sustain at the current levels, and that's been evident from the Singapore GRMs that we are witnessing over the past few weeks. Having said that, I think that diesel marketing margins are also largely playing on to the stocks. Being a commoditized business, our take is that these will not sustain either. So yes, I think if you are making decent money on OMCs, I think you can book partial profits onto these stocks. We do like the private refiners, so I think Reliance on declines looks like a very, very probable bet to play the oil and gas story. When it comes to the airline stocks, I think I do not understand the industry that very well. So I think the stocks move with the fall in crude prices and the ATF prices. Once they are down, I think the stock prices move up for obvious reasons because the margins will go up. But again, I think there is too much competition. The load factors have still not picked up. A lot of the companies still have a negative net worth. And I think clearly, I think the cash flows are not evident in these lines of businesses. So clearly, I think I'll stay away from the airline stocks. They can be good trading bets, but not fundamentally, structurally, long-term good stories that one can really hang out with in their portfolio.
Mitesh, your sense on the charts for Jet Airways and SpiceJet? I request, for the 3-month chart on both these stocks, because year to date, of course, a single-digit gains coming in. But do you think momentum can carry, the tradable rallies for these stocks to higher levels?
I'm not tracking SpiceJet, but Jet Airways today the volumes are nearly about 4 times the 5-day average with a good price action of about 8% plus. I think the recent highs of 415, 420 could be the first target, but I think they will eventually be crossed. And we will look at levels of around 445 to about 450 on the upside. So I think there's still about 12-13% kind of a trading move which can happen in Jet Airways easily.
19.5% for DLF now. What a move. I mean, I really don't remember last time DLF, irrespective of the cycle, appreciated by about 19%, 17.5. Our graphic is also taking time to refresh because the price action has been so terrific. 19.3, that's what my screen seems to be indicating. State Bank of India up 3.5%. Ashok Leyland up by about 1%. Arcom up by about 1%. Mayuresh, what really triggered this selling stampede in ADA Group stocks yesterday?
So not really sure, Nikunj, but clearly I think we are not very comfortable with the business models. So I think whether it's Arcom or Reliance Infrastructure, I think inherently all these businesses have certain issues within them. And again, I think we would prefer better companies. So I think we would prefer companies within the auto space, within the IT space. I think there the visibility at least is looking much better than a lot of these ADAX stocks.
Oh yes, indeed. And that's where you're seeing a bit of a technical bounce back for all of these names, which were, like Nikunj said, they faced a stampede in yesterday's session. Punjab National Bank, that's gained about 8.5% in the session today. In fact, among the top gainers are all the PSU banks. Not that the private banks are far behind. You just take a look at the list on the index. The top 5 names are banks. So clearly, the rally is led by the rate sensitives and financials in particular. But post this quarter's earnings, Mayuresh, do you think the focus shifts now to PNB? In all these tradable rallies, one is looking at how SBI is still holding fort, and it's still seen as the safest bet if you have to have any sort of exposure to PSBs. But given the recapitalization plans, given how they've arrested asset quality pressures this quarter around, could you be seeing more upside from a risk-reward perspective for a PNB and thereby, look at gaining exposure there? Is that what you're advising clients?
So Tanvir, as I mentioned earlier, I think the upside for PSU banks is quite huge. The valuations are also very, very attractive. But again, the internal accruals themselves are not suggesting a screaming buy at this point of time. So I'll wait and watch for stability of numbers to come through. As I said, the management is very, very cautious even on PNB side to grow their credit book. The kind of exposure that PNB has towards text out sectors will probably take a toll if the credit cycle does not improve. And clearly, I think recoveries, upgradations and stability in asset quality is top of their mind. So yes, I think the recapitalization will work wonders for a lot of these banks. But again, it will take a long time because I think for balance sheet expansion to happen, even if funds come through, it will take a lag effect for them to reflect onto their P&Ls. So clearly, I think we'll wait and watch for at least the next quarter's results. I think if we see stability happening on all fronts, on all parameters, we might review our estimates for the other PSU banks. But I think State Bank is the way we like to go about the PSU banking space.
Fair enough, Mayuresh. I take that point. My question was more specific about PNB's outperformance from here, whether there's potential of the same. The stock is down 24% from a year-to-date perspective, weighed down by concerns in asset quality. But let's get in trading ideas. It's 3:20, 10 minutes to go before trade wraps up. Ashwini, your calls first.
See, Maharaja batteries, that's a buy with a stop of 970. Look for targets of 1010. And also Indiabulls housing is making a fresh high. So that's a buy with a stop of 785. Look for targets of 820.
What you?
I have one more banking stock and that's PNB. Good breakout taking place over here. So that's a buy with a stop at 162 for targets of 176.
Ashwini, does it make sense to back these ugly ducklings? I mean, real estate stocks, PSU banks, that's the dirty picture.
Rally, these stocks are good because this is where the short positions are. So from a futures perspective, you'll fairly quickly get, your 20-25%. But from a longer term perspective, stocks which are going to make new highs are in housing finance, are in auto ancillaries, etc. So these sectors will give you your 20-25% bounce and then possibly make new lows again. So DLF, I'm not too optimistic beyond 160, 165.
Okay, not too optimistic beyond 160, 165. Z Entertainment and, from the whole broadcast business, while one is tracking Sun TV and what the stock has done over the last couple of sessions, given that the legal overhang has eased a bit, not completely cleared out. And also earnings have come in strong. Z Entertainment, given what Mr. Chandra said on the channel a few days back, Mayuresh, do you think that, this one is in a zone of its own, enjoying premium valuations, but also enjoying the fact that, there are very few marquee listed names within the broadcast space with the kind of muscle that Z Entertainment has with its group of channels, regionality playing up for the business, as also a fairly strong traction on ad revenue growth?
So yes, I think on all these parameters, he has outperformed. So when you talk about the regional play, when you talk about how they've been growing their ad revenues, I think it has been quite substantial. However, I think the take has been on the sports business, which is still expected to post losses. But again, I think that is more or less within the parameters that has been said by the management. Valuations are a tad bit too expensive. So clearly, I think investors holding on to Z should hold on. But again, I think within this whole space, as I said, we've got a strong buy on HMBL. So Hindustan Media within the print media space is something that we like.
What about Sun TV? Mayuresh?
No, I think yes, it's bounced back because of the news flow that is associated with it. It's bounced back because of the news flow associated with it, Tanvir. The valuations again largely lower than the long-term averages, but clearly I think we're still maintaining a neutral view on the stock. I think the overhang still persists, and yes, I think it's got its regional leadership going in the southern states. But clearly, I think we'll still prefer something like the print media companies, and I think something like Z. So I think our hold rating on Z still continues.
Z actually has not done badly of late, but the real star sector for the week has to be the IT index, because the IT index in this week itself has registered a mighty gain of about 2.5%. FMCG index, classic defensive, market conditions were slightly shaky, slightly wobbly. That index has gone down by about 2.5%. So the IT index on one side, FMCG index on the other side, things have got really counterbalanced. There you go, the IT index. That's the FMCG index for you. The capital good index this week has registered a knock of about 2.3%, but the IT index has stand corrected. I think the gain is not 2.5, including today, which comes from TCS. The gain is about 3.7%. So Mayuresh, is it only rupee which is driving IT stocks?
Rupee is part of the variable, Nikunj, as I mentioned earlier. I think the overall growth dynamics look extremely encouraging for a lot of the top tier IT stocks over the next couple of years. As I said, the US markets are showing signs of recovery. I think the discretionary spending trends have increased multifold. The number of client wins for a lot of these top IT companies have gone up significantly. Europe has been stabilizing, and as I said, the client mining activities have grown multifold as well. Again, I think the kind of channelizations that these guys are doing into digital and the associated spaces, I think that will augur well for the stock. So as I mentioned earlier as well, in constant currency terms, both in terms of volume and revenue growth, we're expecting at least 10 to 12% for the IT companies going forward, and that's again on a very conservative basis. So yes, I think we remain extremely optimistic on the top tier IT space.
Mayuresh, what about the big refiner, the key heavyweight, Reliance Industries? And just when we think that it's going to move the needle on the stock price, and I know this is your top recommendation, the fact still remains that it's still a struggle for Reliance to trade above 1,000.
Well, yes, and as I've been mentioning earlier as well, I think it will largely underperform for the better part of FY16. I think the capacity utilization and the expansions are going to happen by the end of FY16, beginning of FY17. So I think the numbers will start getting reflected in a much positive tone FY17 onwards. So Reliance is not a story which can be played quarter on quarter. This is more a long drawn play, and the play is obviously on the kind of capex that it has done, both in its core business and the non-core business. The non-core might still drag the consolidated ROEs for Reliance even in FY17, but one really needs to see that the core business will start performing well, and most of their capacity expansion plans are very much on the track. So I think it's a play which is more than a year, year and a half or 2 years, and it's not a quarter on quarter story. So I think Reliance is a play that we like with a long-term bias. I think the GRMs that you're probably seeing a witness in slowdown, I think that might have some impact when it comes to the underperformance of Reliance. But clearly, I think all the key variables that Reliance is attending to, I think it will move effectively when it comes to earnings post FY17.
Mitesh, I'll let you have the final call on Reliance. 966, it's up 3.5%. Can it go conclusively above 1,000?
I think 980 is the key level to watch out for. The stock did a big consolidation between 980 and 1020 and broke below that. So if it can capture 980, the next logical target will be around 1020 on the upside. And I think it could happen given the way the Nifty is moving. Eventually, Reliance will also turn from lower levels. It's gone through a good correction, given a good pullback to its weekly averages, now trying to bounce back.
Okay, gentlemen, stay on with us. We'll get to closing comments from all three of you in just a moment. I want to mark the market into the 9 minutes of trade, the final roundup of the session, and you're looking at the index closing a good 2% higher. That's encouraging. And I just want to remind our viewers who are joining us right now, just for the closing, that we have outperformed the rest of Asia today. So this rally is more local driven than linked to the globe. Europe is insipid in the session. There's not much activity that Asia has closed with either. So we've stood out on our own merit, given internals and local factors, and also perhaps murmurs in the market that there could be an out-of-turn rate cut. No confirmation, nobody is stating that clearly. There's just some talk in the market, which is what is bringing about excitement in the broader sentiment. Small cap index and mid cap index have about 2%. You have the banking sector, which is largely leading this rally. So, part of the rumor or murmurs come in from that aspect, that rate sensitives particularly have contributed to the broad-based buying interest. Real estate as well, and autos being the third wing of that basket. So you have PNB, which is closing up 9% higher, Yes Bank, Bank of Baroda, Kotak Bank, IndusInd Bank, ICICI Bank, SBI, all of them being key gainers. That pretty much constitutes your top 10 gainers in the session so far on the index. Throw in a Z Entertainment, good move for that stock. Vedanta also, good bounce back above 100. There's Reliance Industries knocking at 1,000 again, 3.5% higher. Bharti Airtel, Bajaj Auto, Idea Cell, M&M, some of the autos have also pitched in. It's a day where most stocks have done decently well on the index. BPCL, and one would just add that the trade over here is one of profit taking, because BPCL, HPCL, IOC, given the new reality of suppressed crude oil prices, have already seen a very strong run year to date. So, some profit taking coming in at higher levels. Infosys is a bit soft, but IT, as Nikunj highlighted, the IT index has gained about 3.5% for this week. This sector has perhaps taken a cue from a weakening currency, as well as from the fact that earnings this quarter around for the sector stood out compared to the other spaces. So some sort of a positive bias, from the institutional investors' desk favoring the IT names. To the broader markets, and you're looking at the mid-cap and the small-cap indices, like I said, gaining about 2%. DLF is your star, and we can go on talking about this one, but very, very strong move on DLF in the session. 135, and in a long, long time, you've seen such a strong price and volume action supporting the stock. I think more than 2 crore shares traded on DLF. HDIL also up 11%. It's had its rub-off really on the entire real estate basket. So Indiabulls Real Estate, Godrej Properties, all of those names have seen interest in the session. Aside of that, you have also some of the power utilities, stroke infrastructure, stroke engineering companies, investment-led themes, where also they would also derive some value if a rate cut does happen. So, you're seeing interest there as well. Adani Port also higher by about 8.5%. And then crude essentially being a variable for airline companies, and a strong one at that. Jet Airways up 8.5%. It's gained considerably over the last 3 months, I think more than 10% or so. SpiceJet has also rallied in the back of that new reality settling in for crude. And then some of the pharma names too have performed. Amongst the losers, the only one that comes to mind is Jyoti Structures, which has tanked about 20%. Bharti Infratel, some profit taking coming in there. And the commodities basket has been largely weak, so not too much to write home about from that pocket. IL&FS Engineering also down about 5%. The weekly performance will come up for you on your screens, but let me just get a quick round of closing comments from all our three guests. Mayuresh, come to you. For the coming sessions, for the remainder of this month, now that the earnings season is over, you may have reviewed a lot of the companies on the back of perhaps earnings breaking out or the cycle turning for the business for the worse. Where have you reviewed your call, and what would be your high conviction ideas now?
So clearly, if you leave aside the top tier names that you discussed within banks, IT, I think within the mid-cap universe, TVS, Sri Chakra in the tire space is something we believe have posted a good set of numbers. The original two-wheeler market should hold on for TVS, with Honda motorcycle increasing their capex and capacity. So clearly, I think top line growth expected to exceed 12.5% on a CAGR basis, 2,400 odd crores, margins to sustain between that 15-16% level, and again valuations not looking too stretched. Forgings within the auto ink space is something we continue to like. They've increased their capacity to 65,000 MT from 40,000 MT. They cater to the exports market in the MHCV segment. The American markets have shown good amount of volume growth, and clearly I think the margin expansion would be evident here as well. And within the consumer discretionary space, Bajaj Electricals numbers have stood out for us. The E&P has turned around for them. We did believe in the stock at lower levels as well. We suggested that in our channels. We continue our conviction call on this. The consolidated numbers should appear far better in FY17, and it should actually start posting EBIT profits on the E&P and consolidated profits as well.
Thanks, Mayuresh, for joining us and giving us your perspective on the markets. Really value your opinion. Thanks very much for taking out the time. Let me get in closing comments from both Nitesh as well as Ashwini. Ashwini, what's your own sense of how things will pan out in the coming week?
See, I'm very pleased with the structure of the market. That is defined by how a market accepts bad news. Till yesterday, Parliament didn't do anything, yuan depreciated, and there was gloom and doom. And market today turns around and gives you a 500-600 point on the Sensex. That just means that this is a very strong market and all sorts of bad news is getting bought. So the structure of the market is fairly intact, and all the leading groups and leading stocks should be bought on all declines, regardless of most pieces of bad news. Greece has happened, China has happened, and the market has held steady, held on to 8400. So that's extremely positive. When the good news starts coming, I wouldn't be surprised if the market can take 8650 out and move closer to 9000.
Okay, Ashwini. Mitesh, your closing comments?
Yeah, I think, if you were to look at the last few weeks of price movement for the Nifty, it's 8300, 8320 on the downside, about 86, 8650 on the upside. Now, we've been sideways in this broader range, and we've been looking at, rallies or downswings happening within this range. Today, we've kind of turned from the lower end of the range, at least, and, closed with a very strong price action. That suggests that we should retest the earlier highs of 8620 to about 8650. And if we break out, I think this has been a 250 to about 300 point kind of range. So if we start getting past 8650, I think a 250 point kind of rally is the minimum which the market should do. That will give you targets of 8900. So I think for the time being, we'll start with the up move, which can possibly see us test levels of 8620, 8650. But if we start going beyond that, then I think, clearly this market should gain more momentum.
Gentlemen, thanks very much for joining us today. That's the weekly close for the market. Really appreciate your ideas and your investment thesis in the market. 0.5% down for the Nifty, 0.5% down for the Sensex, about 1.5% lower for the mid cap and the small cap indices. Had it not been for today's comeback, those numbers would have looked a lot weaker for the last 5 sessions that the market has traded, because the first half of this week was very painful for the markets given global cues. We'll take a break then. We'll address those global cues this afternoon. How's Europe looking? Range bound, incipient trade, nothing really to write home about, but we'll still address what's impacting market sentiment there in just a bit.